Okay, so the big news story at the moment is APRA introducing tightening of lending for all of the banks. And so today I'm joined with Tammy on the end of the call. Hi Tammy, how are you?
I'm well, thanks Max. How are you?
Good, thank you. My name is Max Phelps. I'm a money coach with Golden Eggs, where we're on a mission to help people stop worrying about money and get on the path to financial freedom. So Tammy, have you heard the news?
Yes, I have, but I be honest, I don't know much about what's going on and what it means for us.
Yeah, well, the interesting thing is that it was telegraphed that there was going to be some changes happening, and one of the things they thought they were going to be introduced was a cap on the borrowing multiple of income. So, for example, we thought what was going to happen was if you're earning $50,000 a year, there's going to be a cap of 6 times your income, which means you cannot borrow more than $300,000. Or if you're earning $100,000 a year, you can't borrow more than $600,000. Now, that didn't happen. Instead, what APRA said is that they're going to introduce an extra 0.5% on the assessment rate. So, when you borrow money, and you might get an interest rate of, say, 2%, 2.5%, 3%, depending on the kind of lending. Banks want to know that you can afford it if interest rates go up.
Right,
now,
yeah.
Up until the end of this month, they're adding 2.5% on to that rate. So if you're paying if you're paying 3%, they're adding 2.5% on, which is 5.5%. Suddenly, APRA have said they've got to add 3% to whatever you're paying. So you've now got to afford, if you're paying 3%, you've now got to be able to afford the mortgage at 6%, otherwise the banks won't give you the money. Now, up until now, all the big banks have had what they call a floor assessment rate. And that means that they won't assess you below a certain point. And for the bigger banks, that's about 5.1 to 5.25%. Now, with fixed rates of 2%, 2% plus a 2.5% buffer is 4.5%. But if the minimum is 5.25, then they will assess it on 5.25, not on 4.5.
So this is all just going to make it much more difficult for us to borrow. We're going to have to
hang on a second. It depends. So if you're paying 2%, 2 plus 2.5 is 4.5, still below the 5.25 minimum. If they're now going to add 3%, then 2% plus 3% is 5%, which is still below the 5.25 minimum. So for people paying up to 2.25%, there will be no difference. And that's typically an owner-occupied principal and interest loan. But if you're getting a loan that you're going to pay more than that, which is actually for some of the bigger banks on their variable rates at 2.5%, then 2.5 plus 3 is now 5.5, is going to make a small increase.
Right.
But for investors with interest-only loans that are typically around 3%, they were getting assessed at 5.5%. Now they're going to get assessed at 6%. So for investors, it's going to make quite a big difference.
Right.
All makes sense so far?
Yes, it does make sense. But so for current investors, does it make any difference to them or for future investors?
Well, firstly, the changes don't happen until the 1st of November.
Oh, okay.
Secondly, APRA only has jurisdiction over deposit-taking institutions, which is basically banks.
Yeah.
But then again, there's lots of lenders that are not banks. So, for example, obviously Commonwealth Bank, Westpac, NAB, ANZ, AMP, Macquarie, they're all banks. But lenders like Resimac, Firstmac, Pepper, Liberty, they're not banks. And so therefore they're not impacted at this stage. And in the past, they've not really been impacted by the legislation. But for those people that are using a mainstream lender, they might be able to do some things this month that they can't do next month. And what that means is that they may not be able to refinance their loans after next month or at some point in the future. Because if they were already borrowing at their maximum when they were being assessed at 5.25 or 5.5, they can't afford the loans at 6%, even though they're only getting charged 3% today, and the interest rates haven't moved. They need to be able to afford more to borrow the money that they already owe, and so therefore they may not be able to refinance.
So, but they could always go to a lender, like a non-depositing,
Correct.
lender.
But and that's the benefit of using a mortgage broker, because we just go, we can't do this with CommBank, let's go to Resimac, or let's go to another lender. Whereas when you actually go to your bank, you might find that one bank says no, the next bank says no, the next bank says no, and before you know it, you think the whole world is a no. Whereas if you go to a broker, then they'll obviously look across the different lenders and hopefully get you the money that you need, providing you're not taking unnecessary risks.
Right. Okay, well, it doesn't sound too bad, because originally I thought it was just, going to be doomsday and no one would be able to do anything.
Well, there's an interesting psychological aspect to this. So as soon as people think there's a change that sounds a bit scary, it puts people off.
Yeah.
So imagine for a second you're a buyer looking to buy a property, and you know something bad has happened with APRA, but you don't really understand it, how it impacts you, how it impacts other borrowers. Then you might want to wait until you understand a bit better, or until the market has settled down. Now, as soon as that thought is in the head of buyers that they're going to wait, then that obviously relieves the pressure that we currently got on some of the price increases. Not in all markets, but it may have an increase. At the same time, imagine you're selling a property and you know this change is coming and you don't know how it's going to impact yourself or buyers. You might be more inclined to quickly put your property on the market now before those changes happen. And so if you have those two things happening at the same time, then the risk is that buyers become a bit more unwilling to buy and sellers become more willing to sell, and then we get a mismatch between the two, and then prices then tend to, or could tend to, tail off or drop in some markets. Does that make sense?
Yes.
But it's a psychological thing, not a real thing, but it becomes real in the prices.
Right.
So the tip that we've got is, firstly, understand how it impacts your own situation. Secondly, talk to a good broker. And thirdly, don't listen to all of the hype and bad news in the media and assume it's all hype and bad news. Understand how it's going to really impact yourself and those around you.
Yeah, of course. Well, yeah, that definitely is more positive, and I think it will give comfort to a lot of us, especially investors.
Yeah. So that's it for that sort of topic, because we need to move on quickly. Again, remember that we always try and help people out whenever we can. Be genuine, have fun, and stay curious.